Hello ladies and gentlemen, this is Usman Ali and the video is regarding the third depreciation method. So we have started this video series on the depreciation methods and this is the third one. So we will discuss activity method in this second video of the depreciation series. Now if you have watched the first video, so we have already gone through the question and the data given to us. In this activity method, we will use cost of assets. We will use salvage value, but this time we're going to use the output estimation or output level of this machine that was purchased instead of using 5 years as the life. So let's go through the activity methods, and along with this there are some hours also given on year basis. Like for year 1 the machine has worked 200 hours, for year 2 the machine has worked for 500 hours. So as you can see that the estimated number of hours life of the machine is 1000. So this 1000 is actually distributed on yearly basis. So if you are using machine more frequently, then the machine will get depreciated quickly as well. But if you are using the machine slightly slow, then the depreciation will also be slow. So let's go for the activity method this time. So it's exactly dependent on the how much you are using that machine. Now in order to apply the activity method or calculate depreciation using activity method, we first need to know how much is the rate per hour in our example actually. So to calculate that, the formula is same with a slight difference with straight line method. That's cost of asset minus salvage value. So this part is same, and we used to divide it by life. Here we are dividing it by the output. So our cost of asset was 1,17,900 minus the salvage value of 12,900, and we will divide it by 1000 hours, which is the total life of this machine. Now if you divide it and simplify it, we get $105 per hour, which means if the machine works for 1 hour, then our machine will depreciate by $105. So the day when we purchased that machine, that was year 0 actually, and the worth of that machine was exactly 17,900. But then in the first year when it was used actually, so how much it was used, again it's given to us in the question. In the first year it was 200, 150 in the second year, 250 in the third year, 300 in the fourth year, and 100 in the fifth year. So remember these figures of number of hours. So we used it for 200 hours in the first year. So what I will do is that I will multiply this 200 hour, which is the quantity, with the rate that we have calculated, that was $105 each. Okay. Likewise, we used it, if you remember, we used it for 150 hours in the second year, and the rate it was calculated as 105 each. Okay, let me put hours here as well. Okay, then in the third year the machine was used for 250 hours with the rate of $105 each. Likewise, in the fourth year it was used 300 hours, and again the rate remains same. So the constant thing here is rate, not the quantity of hours that we have used the machine. So it just depends on my demand or on my production. If I am producing more, so obviously the machine will also work more, so it will be depreciated more as well. So if I multiply 200 quantity with the rate of $105, we get a depreciation of $21,000 in the first year. If I multiply 150 with 105, so we will get a depreciation of $15,750 in the second year. Then 250 hours multiplied by $105, we get a depreciation of $26,250 for the third year. 300 multiplied by 105 gives us a value of $31,500, which represents the annual depreciation. And for the last year, our depreciation is $10,500. Now, accumulated depreciation. Accumulated depreciation represents the total amount of depreciation that has occurred till today. So today it's the end of first year. So whatever is my current depreciation, that will be actually my total depreciation or accumulated depreciation also. Then what I will do is that I will minus or subtract this 21,000 from the book value, which was at the start of the year. So 1,17,900 minus $21,000, will give us a value of $96,900. That would be the remaining book value at the end of the second year. Likewise, for the second year, this would be the ending value at the end of first year. Now, for the second year, our depreciation is $15,750. So our accumulated depreciation will be current year depreciation plus the depreciation of all the previous years. So that's $21,000 plus $15,750, which gives me a accumulated depreciation of $36,750. While my remaining book value would be $96,900 minus $15,750, which gives me a net value of $81,150. Then at the end of the third year, my accumulated depreciation would be $36,750 plus $26,250. If you plus it, we get a value of $63,000. While our remaining book value would be $81,150 minus the depreciation of the current year, which is $26,250. So we will get a value of $54,900. That's the remaining book value. Then for the fourth year, our accumulated depreciation will be $94,500 because we added $63,000 with $31,500. While our remaining book value would be $23,400 because we subtracted $31,500 from $54,900. Our last year accumulated depreciation will be the current year, which is $10,500 plus the total of the depreciation till the previous year. So it will give us a value of $1,05,000, while our remaining book value would be $12,900, which we got by subtracting $10,500 from $23,400. So ladies and gentlemen, if you see, $12,900 was actually our salvage value also. So this is how the activity method works, slightly different from the straight line method because of the formula quantity multiplied by the rate. And to calculate the rate, you're going to use a formula which is quite similar to, or almost similar to, the straight line method. That's activity method for calculating depreciation. Thank you very much, ladies and gentlemen. Stay safe.